Hello and welcome to another update video about Polygon MATIC. Polygon MATIC yesterday was pushed down by this 50-day moving average. I made you aware of the 50-day moving average here and that there was a risk it is pushing down the MATIC price. It's holding it down. We could see that already very clearly here in the last Polygon video. Indeed, Polygon failed to break out above the 50-day moving average, then broke out of this channel or descending broadening wedge, however we wanna call it. You could have even called it a bit of a bull flag. Anyway, it broke out to the downside because it could not push above this resistance, which I flagged up, this important one, the 50-day moving average. It broke down as a result. And what you usually have when you lose support, you land on the next support. What was the next support? I think I made you aware in a previous video here, the retracement levels of that possible wave 4 would then be the 50% fib retracement. And we perfectly reached the 50% fib retracement at 51.1 cent. Now that is nothing unusual for a wave 4 to go to the 50% retracement. However, it stretches a little bit what a wave 4 can do. The wave 4 should not really drop any more than the 50% retracement. So my view is, if we go lower than this, we probably need to rethink this. Yeah, because the 50% is just sort of the limit that wave 4 should really do. Usually in wave 4, the minimum is the 23.6% fib level was reached, ideal retracement 38.2, and sort of the maximum you would reasonably expect from a wave 4 is the 50% retracement. Strictly speaking, the wave 4 could still drop lower until we go into the wave 1 price range. That would be below 45 cents. But it is just very unlikely that if this happens, that it still is a wave 4. So for now, we need to be watching this 51.1 cent level. And in my opinion, if we climb up the fib ladder again and get back into this sort of wedge pattern, which means we would need to get above 54 cents, then we can assume more rising prices. But then again, we've got the 50-day moving average here. So I would be careful to go long now until we have broken the 50-day moving average, because this is just an important, very strong dynamic resistance level which is currently pushing the price down. However, a breakout above it would indicate bullish momentum, and if that happens, we could also complete here this wave 5, which is currently located here around 70 cents. Now that wave 5 target has shifted now because the wave 4 has moved down lower, so we can just calculate that. And for that, we take here the wave 1 high and add it to the wave 4 low. And then a target for that, let me just take these out here. A target for the wave 5 would be the 100% extension, which is here 65 cents. So it has moved down a bit. That's the first target. Second target would be the 73 cent level, the 1.618 extension. But in this wave 5, what you would assume, if this is an impulse, and this is what the chart now needs to prove to us, we need to break through. As you can see, the wave 5 target is here. We need to clearly break above the 50-day moving average. And that is what I'd be watching out for here today, or maybe tomorrow, depending on how long it takes. Yeah, so this is important for MATIC to now not drop lower in this bullish scenario, and indeed to break above the 50-day moving average and reach the wave 5 target. Then all of this impulsive move here would be invalidated, it would be corrected, and we would come down maybe into the region. Let's just try that based on the latest wave 5 target. We would come down maybe here into the region of 48 cents again, 44.4. That is sort of the region where you would expect then in a wave 2. So when this larger wave 1, which is a 5-wave move, when all of this will be finished and then corrected in a wave 2, that is where you would expect that wave 2 to land, sort of between, yeah, I would say 40 and 50 cents again. So that will be quite a bit of a dump again. If we reach 64, this all should be corrected once more. Yeah, bear in mind, we also have not yet broken above this important wave E high that I mentioned at 66 cents. This is the previous larger wave 4 high and also an important breakout level to the upside. And until we get above that, again, similar to the Bitcoin chart where we have a very important resistance level on the chart, until we go above that, there is still significant downside potential, and we would have to assume all of this could just be a corrective move and we might still see lower lows. So at the moment, we still need to have all of this very much on the radar. Yeah, please be aware of that. Until we take some of these very, very important resistance levels out, we still have significant downside risk and could even make lower lows in the worst case. So we need to have it on the radar. We first need to substantially break above certain resistance levels to really, really reduce that downside pressure. At the moment, we could be seeing a fifth wave of a first wave. So this could still be starting now, and that would be a bullish signal and indeed good indication that we are here in a breakout. But first of all, that higher high is now needed. This is desperately needed. Okay, so hopefully you liked the update about Polygon. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, check out the channel membership. Thanks a lot for watching. Bye-bye.